Hello, and welcome to Financial Market Insights for Traders. I'm your host, Sophia. Whether you're just starting out or already have some trading experience under your belt, today's episode is going to give you real, practical value. We're diving into the top 5 Forex trading strategies, and just as important, how to choose one that actually fits you. So, if you've been researching Forex trading for beginners step by step, trying to make sense of what strategy to follow, but you find yourself bouncing from one method to another, this is for you. We're going to stop that cycle of strategy hopping right here, right now. Let's break down 5 of the most effective and beginner-friendly approaches to trading in the Forex market. We'll go deep into each one, no shortcuts. Trend following. All right, let's start with the classic trend following. This one's all about aligning yourself with momentum. When a currency pair is moving in one direction, up or down, trend followers jump on board and ride it until the trend shows signs of reversal. It's based on the old trading wisdom. The trend is your friend. Now, what do trend traders typically use? They're looking at moving averages, like the 50, 100, and 200-day exponential moving averages. Trend lines drawn across highs or lows help mark direction, and tools like the Relative Strength Index, or RSI, measure whether the trend still has steam. There's also the ADX, the Average Directional Index. That one measures the strength of a trend. So who should try trend following? If you prefer longer time frames like daily or 4-hour charts, and if you like a more strategic and less reactive style, this could work well for you. It also rewards patience because trend traders aim to catch large moves, not scalp pennies. Why does it work? Because markets tend to move in trends, especially during strong macroeconomic cycles. Trend followers don't try to guess the top or bottom. They aim to capture the meat of the move and stay out of the noise. Pro tip for this one, use proper Forex risk management. That means maybe risking 1% per trade and aiming for a 2 to 1 reward to risk ratio. And don't jump back in until the next trend confirms itself. Scalping. Now, on the opposite end of the spectrum, we have scalping. This strategy involves making multiple fast trades per day to capture small price moves. Each trade lasts seconds to minutes. Scalpers go for volume, not big profits on single trades. You'll be using ultra-short time frames like 1-minute and 5-minute charts. Indicators? Think Bollinger Bands, the Stochastic Oscillator, MACD. These help identify quick overbought and oversold moments. To pull this off, you need a low-latency trading setup, fast execution, and brokers that offer tight spreads, preferably ECN accounts. Best for? People who are glued to the screen and thrive on fast decision-making. If you like quick hits and have the discipline to manage risk tightly, scalping can be powerful. Why it works? Forex markets are extremely liquid. There are always micro-movements to take advantage of. But this is not for the faint of heart. It's mentally exhausting and unforgiving. Risk tip: never risk more than 1% per trade, ever, and keep trades during volatile news releases to a minimum. Extra bonus tip: try scalping during the London/New York session overlap. That's typically the best time to trade Forex for high liquidity and tight spreads. Carry trade. Let's shift gears to something more long-term, the carry trade. Here, you buy a currency with a high interest rate and sell one with a low interest rate. You hold the position and collect the interest rate differential, also called the swap. What tools do you use for this? Mainly, you're going to focus on fundamental analysis, tracking central bank policy, interest rate projections, and economic indicators. You want pairs like Australian dollar to Japanese yen or NZD/JPY that have wide interest rate gaps. Platforms that show you swap rates are essential, along with indicators that reflect risk sentiment. This is best for patient, long-term traders who aren't interested in watching charts all day. Maybe you want passive income with a fundamental edge. It works because in stable markets, investors seek yield. Carry trades tend to build up slow and steady, and if the market trends in your favor too, you win twice. Warning: don't do this if you don't understand how Forex leverage works. Sudden geopolitical events or central bank surprises can make this blow up fast. News trading. All right, moving into the high adrenaline zone, news trading. This strategy centers around trading major economic news events. These include non-farm payrolls, GDP reports, interest rate announcements, and CPI numbers. News events often spark huge price moves. If you're positioned well, you can capture profits quickly. But it cuts both ways. Tools? You'll need an economic calendar, a fast broker with pending order support, slippage control tools, and ideally, a real-time news feed or Twitter alerts. Best for traders who enjoy fast-paced action and can manage their emotions under pressure. You have to know how to trade Forex news. That includes setting bracket orders, managing slippage, and handling whipsaws. Why it works? Because traders react emotionally and prices often overshoot fair value immediately after a release. You can ride those spikes. Risk? Huge. Use tight stops. Know your max loss before the trade. And don't try to trade every news release. Focus on high-impact ones like FOMC or NFP. Range trading. Next, we have range trading, a more structured and calm approach. This works when the market is flat, bouncing between support and resistance levels. You buy at support, sell at resistance. Tools include horizontal support and resistance lines, RSI and stochastic for overbought/oversold readings, and reversal candlestick patterns like pin bars and engulfing setups. Volume can also help you spot weakening momentum. Best for traders working during quieter hours, like the Asian session, which often is the best time to trade Forex in lower volatility regions. Why it works? Markets often consolidate, and during these sideways phases, prices bounce predictably. This strategy aims to capitalize on that behavior. Downside, you have to be ready for a breakout. Use stop losses just outside your zones. Bonus, combine it with Bollinger Bands to filter noise and find cleaner setups. How to choose the right strategy. So now you know the 5 strategies. The next big question, which one is right for you? Let's break that down. 1. Look at your schedule. Can you trade for hours every day? You might like scalping or news trading. Only have evenings or weekends. Try trend following or carry trades. 2. Know your risk comfort. If high stakes moves stress you out, avoid news trading. Prefer predictability? Range trading may suit you. 3. Understand your personality. Are you impulsive? Scalping might appeal, but be careful. Prefer data and structure? Trend following could be ideal. 4. Always test. Backtest your strategy on historical data. Use demo accounts. Keep a trade journal and review after a month. Whatever you do, avoid falling into the trap of strategy hopping. Consistency beats novelty. Every method works in some market condition. The real edge comes from sticking with one and executing well. Final thoughts. You don't need to know every strategy in the book. One solid, well-executed plan will take you much further than 10 you barely understand. Whether you're digging into Forex strategies for beginners or trying to evolve your trading game, stay focused. Choose a strategy that aligns with your personality and lifestyle. Master it. Optimize it. Scale it. That's how professional traders build success. And hey, if you're just starting out and want the right platform, check out crystalballmarkets.com. It's beginner-friendly and built for real learning while you trade. Want to keep learning while on the move? Tune into the Crystal Ball Markets Forex podcast. It's packed with insights for beginners and beyond. Thanks for joining me on Financial Market Insights for Traders. I'm Sophia. See you in the next episode. And until then, trade smart and stay focused.